Hello, I'm Janne Muta, Chief Market Analyst for TIOmarkets, and in this video I'm going to take a look at USD Yen, Euro Yen, Euro Pound and US Oil. So we are going to see where the key levels are, how the price action is going and what needs to happen in order for these markets to move either forward or reverse their trends. If you don't already have VIP Black account with us, I strongly recommend you look into this because you get razor tight spreads, 0 commissions per lot and no monthly subscription fees. Please do remember that we don't provide any investment advice and you should watch this video only if you agree with this disclaimer. Also, please leave us a comment or question if there's something you would like to have more information on. We are more than happy to help you out. So here we have the bullish market number 1, USD Yen. As you can see, the market has been moving higher. You've been following my videos in the past. We've pointed out to the fact that the market was a buy down here, and now just in the latest video we said that the market might just start to move a little bit more sluggishly. Yes, the bids have been softer. We have lost some of the upside momentum, but is the market now ready to move lower, or is it still going to move higher? At the moment, the answer is, as always with markets, we exactly don't know. But what we can know is that the market is still making higher lows and it is kind of trying to break higher, but it has lost momentum. So now it's highly important if we get a higher low above this 108.30 low. So 108.31 here is the latest swing low. If we get a higher low that is, a low that is higher or a low that is equal to this, then we are fine. Then the uptrend is still in force. But if the market breaks below this zone, then obviously we need to take a look at these other zones down here. So I'm going to give you the numbers now. The first key zone is from 23.6 Fibonacci retracement to this swing low, and this is from 108.16 to 108.37 or so. If that breaks, then the next zone is down here where we have 38.2 Fibonacci retracement and the channel high, and we have a 20-day moving average. So this zone is from 107.45 to 107.65. And then the third zone, it probably will take a bit of time before we get there, but just in case, one sort of this swing high here and the channel low and 61.8 Fibonacci level, these come together, so it's a technical confluence zone at 106.20 to 106.44. Then the bullish market number 2, Euro Yen. As you can see from the moving averages, we have good upside momentum here. The moving averages are set apart and both pointing higher. These averages are 20 period and 50 period. Now the market is trading above this trend line, so it is making higher lows obviously, and the latest swing here, the swing low point, is right fairly close to the trend line. So if we get another higher low or an equal low, then we are fine with this market. Technical confluence zone number 1 is obviously here when we have 23.6 Fibonacci retracement. We have this high here, or this level that resisted price movements for quite a while. And we have the upward pointing trend line, all these factors coming together here. So this zone is from 129.27 to 129.56 or so. If that level breaks, obviously that's bearish, and the next highly important significant level is somewhere down here. Actually, let me draw a trend line there. I'm going to copy this one and put it down here. This level resisted prices, then we had support there. So this could be a level that the price reacts to. But if we are looking for technical confluence zones, the significant confluence zone can be found here, where we have the 50-period moving average and the 50% Fibonacci retracement roughly coinciding. So this zone is from 127.60 to 127.85. Okay, and then we move to bearish markets. As you can see, euro pound in daily time frame is what we're going to look at here. The market has been trending lower below this bearish trend line, and the moving averages are both pointing lower, well wide apart. So we have downside momentum here. The market is making lower highs, lower swing highs, which is obviously bearish. Now this low here that has been holding the market higher for a little while is spot 85.38, spot 85.40. And now, as you know, if the market is trending lower, it's more likely to break supports until we see a reversal process taking place. This is something that we don't have here yet. The market is still trending lower. It is still making lower highs. So it is still more likely to break supports. Now, let's see where the technical confluence levels are exactly. I have colored them here. We have the 20-day moving average, and we have this swing high and this level here that was holding prices a little while. These are coming together with the downward pointing trend line, and the zone is 86.07 to 86.43. If the market breaks above it, then obviously we have the trend line is broken. Sorry, the downtrend is not in force anymore. The trend line is broken, and we have a move above a key zone. And then obviously the next level, then the obvious question is, where's the next level that we need to pay attention to? And it's somewhere around here. We have 23.6 Fibonacci retracement. We have 50-day moving average and this swing high. And these factors are coming together in this zone, 87.03 to about 87.36. Then let's take a look at some markets that are potentially reversing their trends. And the first one is USOIL. As you know, we've been following this market for quite some time, and specifically on this bearish day, when the market was trading somewhere up here. You can check this in the previous video. But we said that really we don't believe oil can have much more upside. Okay, now we don't know the future, but it turned out to be pretty much correct this time. And the market rallied a bit, but now it has something interesting in place. It created a lower high. And it created the lower high around sort of levels where we said we don't really believe this market can move much higher anymore. So when you have a lower high, all you need is a break of the next support, and the uptrend isn't in force anymore. So obviously the market is now trading at very key level, or in a key zone, because we have this low here at 63, and we have 20-day moving average there, and we have the channel low. So this should be, it's a technical confluence area. Several technical factors come together there. So this level should make the traders buy this market. But if it doesn't happen, then obviously the only option is for it to move, and that's the move to the downside. So if the market bounces, yes, that's good. We have a good chance this market keeps on either moving sideways or it attempts to challenge this high again. But when the market has been moving higher for quite some time, creates a lower high, there's a risk that the next support is taken out. If this happens, then the next important zone is down here. We have 50-day moving average, we have a historical support, and we have 50% Fibonacci retracement here. So the zone is from 58.28 to 59.64. Here's another market that is still trending higher, but it is showing some signs of weakness. So let's see how this one plays out. This is pound Swiss in the daily time frame again. As you can see, the market is still making higher lows, and there is this reactionary high here at the moving average. So things are looking okay, but then at the same time we have the top end of this formation approaching the lower end. So we have a bearish wedge in place. So now this doesn't mean that the market is going to reverse, but it means that the risk of a reversal is slightly up. So if the market keeps on wedging, so if the upper end of this formation keeps approaching the lower end, then we have bad news for the bulls, and more people might convert into bears, bringing the market down. Again, the nearest swing point is a key level here. It's coinciding with 20 period moving average, as I said. So as long as we can defend this level, or the bulls can defend this level, or create higher lows, the market is okay. But if it breaks this level, then the next significant level is down here. And if that level is broken, then I guess it's all the way down to the 50% Fibonacci retracement. These levels are 127.80 to 128.18. So again, just to clarify, 127.85 to 128.18. And the next key zone down here, this is not really a confluence zone, but I'm thinking an area close to this 125.78 support here is important. Then here we have a zone which is the difference between this swing high point and the 50% Fibonacci retracement. So that's 23.37 to 23.76 or so. Okay, thank you for your time. It was great to have you here. And as usual, trade safe. Never trade without stops. And I hope to see you in my next webinar. Go to TIOmarkets.com/webinars to register for the next free event.